Hi, it's been quite the busy day for the financial markets today, but clearly the highlight was the presentation of the Monetary Policy Committee's review of the policy as of now, and the fact that the Monetary Policy Committee voted unanimously to keep the policy rate unchanged. What was also important was the RBI Governor's very firm statement that the policy stance would remain accommodative for as long as it takes to ensure that the Indian economy is on a firm footing. Let's understand the context now. Clearly, the RBI Governor said that the rising COVID-19 cases and the limited lockdowns that have announced in several key states is a cause of concern. But at the same time, there is a buoyancy that is being seen in the rural economy, and the vaccination drive that is currently underway is a cause for hope. So, as a result of that, the RBI Monetary Policy Committee has decided to keep its projection for economic growth for the current financial year unchanged at 10.5%. But the inflation target is changing. Inflation, in fact, is rising faster than was previously estimated. And for the Jan-March quarter, that is the quarter that ended just now, the CPI inflation is expected to come in at 5%. For the ongoing quarter as well as the next one, it's expected at 5.2%. In October, December, it's seen coming down to 4.4% and then rising once again in the last quarter of this financial year to 5.1%. And that is why, perhaps another reason why the Monetary Policy Committee decided to be a little cautious on the rates and decided to keep them on hold for now. Now, another major decision or another major move that was made today had to do with liquidity management, and it was the announcement of the introduction of what is being called the GSEC acquisition program, or as the RBI Governor put it, GSAP. That's an abbreviation, and what it is a program to have a committed buying of 1 lakh crore rupees worth of government bonds by the Reserve Bank of India in just the first quarter of the ongoing financial year. And what is more, the RBI Governor said that this was GSAP 1.0, and that implies that there could be a 2.0 and a 3.0 that follows. This is meant to be seen in conjunction with everything else that the RBI does to manage liquidity, which is your open market operations as well as Operation Twist, which, as you know, is the buying of long-term securities and the selling of short-term securities in a bid to control volatility in the government bond market. Now, this latest move, according to bond market participants, is going to achieve its outcome, which is to curb undue volatility in the bond markets. In today's session as well, you had the yield on the 10-year benchmark cool off to as low as 6.08%. What else was announced today? Among the key measures, the RBI opened up the membership to its centralized payment system to non-banks, and that's a significant move because non-banks will now have access to the RTGS and IMPS settlement systems. And the RBI has also raised the outstanding deposit limits in wallets and payments banks to 2 lakh rupees from the existing 1 lakh rupees.